Good morning, good afternoon, and good evening, folks, depending whatever time frame you guys are based in. I am about to, let me just. Okay, so if you can hear me and if you can see my screen, please say yes or no. Hello, Jack. Great that you are in London as well. Okay, perfect. So a big crowd today, certainly, because there's a lot of people in this particular one. And, today is a very, very special day as well, because Joe Biden is about to become the president of the United States, and Donald Trump will be leaving the White House shortly as well. So we're gonna have a little bit of a more fun than usual today. So I'm gonna bring Bloomberg Television into this one, so that we don't miss some of those key moments, those historic moments that we only get to see after every 4 years. So just a little bit about myself. My name is Naeem Aslam. I work as a chief market analyst at AvaTrade. My wealth of experience comes with my 15 years of wealth of experience. During this period, I have worked as a hedge fund trader for Bank of New York Mellon, as an equity trader for Bank of America. And so the news is just coming out, actually, that he is just leaving the office. Let's see if we can see him. He's there. No, he's still not leaving the office, but we will keep an eye on that for sure. So let me just bring out the presentation again, because we certainly don't want to miss that particular scene when when he leaves the office. So we're just going to keep that on the top, so that we can be aware of that particular scene when he leaves it. So as I was saying, during this period, I have worked as an institutional trader for big banks, and now I work as a chief market analyst for Bank of America. It's a great honor to be with you guys, and then holding these webinar series every Wednesday, same time, same place, and these master classes we discuss about various different potentials for you guys, and then to more importantly to really define which way the momentum is in terms of equity market, meaning if the market is overbought or if the market is oversold, and what should be the strategies to deal with them. So let's continue, and then let's focus on that. Before we continue any further, could you please let me know if you guys have attended any of my webinars before? If you have, please say yes. Okay, I see Robin here all the time, and Andres, and then a few other people. Andrew as well. Wow, okay, great, Andrew. I remember a lot of names actually, which are just coming up. But of course, then there are so many no's as well. So folks, this is really going to be fun, this particular webinar, because you have right now three different platforms, MT4, and behind that is your Bloomberg terminal. So you're really getting that sneak peek of a Bloomberg terminal during this presentation, because we just wanted to keep an eye on what's going on in the White House as Donald Trump leaves. So one important thing before we continue any further, folks, is the risk warning. So anything which we'll be discussing in this video cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. Now, for those of you who have attended my previous webinars, you will understand that I always talk about the importance of being on Twitter, and because it really helps you to gauge moves like these, the one which is about to happen when President Trump leaves, how the market will react, when the inauguration ceremony will happen, how the market will react. So all of these important movements and many other like financial data which comes out throughout the week, several times a day. So if you wanted to get all those data directly to your phone, you need to be on a Twitter. And then when you are on Twitter, what you also need to do at the same time is to make sure that the notification, you're following the right accounts. So my account is right here, which is Naeem Aslam 23, and then followed by that is AvaTrade. I will show you these Twitter accounts shortly as well. And secondly, on a daily basis, we put two different videos on our YouTube channel. Firstly, it is your daily fundamental video. This is a live session which takes place between 9:40 to 10 a.m. And during this is your opportunity to come on that and then really ask as many questions as you want. And in addition to that, you get a technical analysis video in the mornings, early mornings, about the derivatives, which are or about the asset classes which are moving really fast. So let's have a little bit more tougher, more detailed conversation on that. Thank you, Jad. Pleasure to meet you too. So how many of you are actually actively using YouTube, first of all? Please say yes or no to learn about markets. Don't be shy. Say yes or no if you are not. Okay. So I see. And then how many of you are actually subscribed to our YouTube channels? Say yes if you are and say no if you are not. So on the YouTube, this is the channel. My channel is right here, Naeem Aslam. I'll show the AvaTrades as well. So are you subscribed to a YouTube channel, to our YouTube channel? Okay, this is very, very sad if you are not, because on a daily basis, you have the opportunity to learn. And then if you are subscribed to the channel, you will get the notification directly on your phone that look, the video has been uploaded or the person is live. So you click on it, you ask questions, and then we are here to answer them. So please make sure that you do that, and so that we can really continue. And then in relation to AvaTrade, this is the AvaTrades, so, the YouTube channel. So again, once again, when you go on it, hit that, smash that subscribe button. I'm gonna move a little bit more quicker. And then in terms of Twitter, so you see, these are the important things. Some people will think that this is a waste of time, what I'm doing, but what I'm really doing over here is to make you understand the importance of this one. Morgan Stanley's earning came. This stock is going to go through the roof today, and it is already pushing the Dow Jones futures higher. So you will be absolutely lunatic if you do not understand the importance of social media and how important it is. Because right now, if you are on it, you will get that notification straight away. You will know that, okay, Morgan Stanley's earning came out, the numbers were a lot more better, earning per share than the expectations. The stock is going to go up, the stock is going to go higher. So these sort of informations, they are very, very important. That is why it is very important for you guys to understand that, and then to make sure that you are following it. Does that make sense to you guys? And then we can carry on with our agenda of the day. Okay, all right. So Donald Trump hasn't still left the office. I'm still keeping that screen there. And in terms of AvaTrade's unique technology, this is quite interesting and revolutionary one-click risk management tool. It is available on WebTrader and AvaTrade Go app. With AvaProtect, you can purchase protection against loss for a defined period after opening your position. If the protection ends and you have an open position, the losses will be refunded. Now, in terms of our today's agenda, let's move on to that because that is the most important thing. So we will be discussing why to trade indices, the inverse of indices, the fund flow, defining levels, and defining strategies. So that's what we will be really looking at in terms of today's agenda. So let's crack on it. Let's have a look at the charts, and then let's see where the market is really going on so far. But I just want you guys to understand, and I wanted to re-emphasize once again, that if you guys are not on the social media, media, if you are not using it, please start using it. Do not ignore it. Ignorance is the first step, which you will basically, which will really hinder your learning process. So I cannot say enough about that. So make sure you smash those subscribe buttons. This is, of course, it helps us on YouTube, but it helps you guys more than anything else because it gets you all the information there. Now, in terms of a Dow Jones, let's start looking at the prices now. Let's start looking at the analysis part of the thing and then see what exactly is going on with it. And if you have any questions, you can feel free to ask me any questions straight away. I'll be more than happy to answer them as we go along. Now, when we look at the Dow Jones chart, I'm going to get rid of all the lines that we have over here, and we're going to start with at the beginning. So what we're looking at over here is we have the daily time frame. So whenever you begin the analysis, you start with your daily or weekly time frame, and then you measure the length of that move. You measure if the index is going upward and downward. Now, how to measure the strength of that index is a second question. But the first question is, why do you want to trade indices? The answer to that is because as a retail investor, you have limited funds in your account that you can trade with. So what you do is that if you wanted to, like, for example, today, Nasdaq futures are already trading quite high. Now, if you wanted to own Apple, you wanted to own Netflix, you wanted to own Microsoft, you wanted to own several other companies, you need to have a very big account in order to do that. Now, of course, as a retail investor, the retail trader, you do not have the same amount of money that institutional investors will have. So by trading indices, it will really give you an exposure, even as of today, straight by, if you trade Nasdaq, you will get an exposure to all the top 100 stocks, which includes Netflix in that. And when you have Netflix within the Nasdaq, you know that, okay, all the pump that is going to happen with Netflix, you will already have an exposure to that. What is the market sell or buy for Dow Jones? Jet, I will explain all of that. Just keep staying with me. We are coming to all of those questions in a bit as we crack on. Now, in terms of the indicators that I pay attention to, I always have three different moving averages. First of all, this is your 200-day moving average, finally your 100-day moving average, and lastly your 50-day simple moving average. Just to let you know, Trump is walking, he's about to leave the office, so this would be quite an interesting one to watch. And don't worry about it if we don't cover everything in this particular webinar, because obviously this is an historic moment which is taking place over here. We will cover that next time in our master series, because these are, they happen every week, so we will cover them now. We can see Trump is leaving the White House finally without celebrating, without giving any much speech or without acknowledging anything. He's just heading to the helicopter. And then probably he's going to just leave the White House pretty much. That's pretty much it. So in terms of a breaking news, that will also come over here as well. So there you go. So serving as president was an honor. That's all what he pretty much said. That serving as a president was an honor of a lifetime. And there you go. He leaves the White House forever. And for the best of things, probably we won't see him ever in the White House again. Right. Right, okay. So in terms of measuring the strength of this one, all what we have to do is we have to see where the price is trading in with respect to these moving averages. If the price is trading above these moving averages, then it really means that the upward trend is in place. But if the price is trading below these moving averages, then that means that bulls have started to lose control of the price. What I also have on this chart is Bollinger Band and the RSI. I do pay attention to them, but I don't necessarily pay attention to Bollinger Band all the time. The thing that I pay attention the most is the price and the price itself. That is what I'm going to teach you guys. Now, in terms of a price action, when it comes to the Dow Jones Industrial, we know okay, so if someone is asking what are the parameters, they're simple moving averages, 50, 100, and 200. If you've missed anything, you can always rewind and you can always watch them on our YouTube channel as well. So now I'm going to start doing some analysis a bit more deeper and quicker because Trump has left. That particular event has gone now. So we will focus purely on here now. So now, where are those important buy and sell zone? Now, first of all, what I see when I look at the chart is that the price is trading above them. Okay, that is great. So the upward trend is in place. And we also know that the price is trading near the all-time high. The all-time high with respect to Dow Jones is just right over here. So we are very much trading within that all-time high area. So that means that any trade which is going to be taking place, we need to be cautious. Another reason for being cautious is that the RSI is trading near that 70 level, and anything which is near or above 70 represent the markets are overbought, meaning markets are too expensive, or in other words, markets are likely to face a reversal. Now, if the reversal happen, where is that important reversal point, price point can happen? The first one is going to be near the 50-day simple moving average, because this is where the market can really come, and if it kisses it, we are likely to see the move to the upside. But remember, that has already happened. One was happened over here, and one was almost happened over here as well. This time price did come close to 50-day simple moving average. It didn't touch it, went back up, but very small move, very minor move. The second time the price did touch this 50-day simple moving average, and then again, very small move happened to the upside again. So what I'm really trying to say is that all these movements, all these price levels that we are seeing after the price is touching the 50-day simple moving average are very, very minor. Nothing is major there. So for anything major, for anything serious price retracement to happen, we really need to see the prices coming close to 100-day simple moving average, and that particular price point is going to be right over here. So if you are an investor who likes to take less risk, then you may want the price wait and then wait for the price to come into this area of support, and then after that wait for the price to move to the upside. But right now, of course, the price can drop to this particular area, and that can certainly work as well, because there is a reasonable area of support over here as well, which is, of course, is your 50-day simple moving average, and of course there is this area of support as well. But for me, the most important area of support is going to be over here, where I have mentioned by these horizontal lines. So in all, I think what we want to do is we want the prices to break above the all-time high, which is just over here. And what we want to do is probably short the market as it approaches here, and let this particular move, by shorting it into here, let this particular move to come towards the 50-day simple moving average. In terms of a risk to reward ratio, this is your risk. And then right over here, this much is your reward. So is it more than 2 to 1? Yes, of course, for sure. So you have that particular price momentum to really play with. Does that make sense so far with you guys? Any questions in relation to that? Remember, this is your opportunity to ask questions. And if you are not clear about anything, don't be shy, because I will not say that is a stupid question. I will always encourage you guys to ask to ask more questions. So there are some of the questions that are there. How did you draw a resistance line? Okay, wonderful question. Very, very basic question, but again, a great question. So this was my all-time high on this particular candle. What I have done is I've just drawn the resistance line by taking going slightly above the high of this one, and then going near the close of this candle, pretty much just near enough close of the candle. Now, this area of consolidation shows me that the price tested this line over here. We had another test over here, another test here. So I know that in around this particular area, price struggles to move higher. So I encompassed all of this area pretty much by looking at the chart, and that's how I've done it. So this is where I would like to take a short position as the market will come into it. In terms of a time frame, as someone is asking, this is your best time frame, daily time frame to do the bigger time frame analysis, and then execute the trades on a smaller time frame, such as your 30-minute time frame as you go into them. Now, as for the S&P, now let's move away from that, and then let's look at the S&P 500 index, and we ask the same questions. Are we in the bullish trend? Are we to do trading to the upside? Yes, for two reasons. The price is trading above the two important moving averages, which we have them, three important moving averages right over here. And more importantly, we have not seen any break of that recently as well. Just like the Dow Jones index, the price action is so similar. The price came and then it kissed the 50-day simple moving average. It went back up. The price almost touched the 50-day simple moving average. And then after that, again, it made a small move to tiny bit of a move to the upside. So the price action overall is very, very same as the other time frame, as the other one. So there's not much difference between this particular time, between this S&P 500 price action and the Dow Jones chart. So they look very, very similar, as you can see. So what we're going to do once again over here is we're going to pay attention to the RSI. The RSI is trading here. This is the 70. So obviously we are still very close enough to 70, meaning we should not be looking at a trade which is long. Yes, the upward trend is there, but for me, it is more safe to draw my resistance. Once again, I'm going to draw the resistance level exactly doing the same, taking most of these candles in, taking the top, slightly top of that one. And now I'm going to wait and then see. You can short the market now and then put your stop losses just above this one, 3,827, or you can still wait for the prices to go a little bit more into this, more close to these price levels. But remember, if the price gets very, very close to this upper line, then the chances will be we will break out of this one and then we will move away from here. Now, in terms of a support, what we first support level that we really I wanted to focus on is going to be near the 50-day simple moving average. And then after that, I will look at something else. Now, this support area is going to be a little bit bigger because it's running from 3,539 to 3,572. But I am looking at this area because it was this particular area when the price came here last time. First the price moved into it and then price spent some time and then massive rally happened. And since then, the price did come close enough to this area, but it didn't touch it. Just like how over here, the price came close to 50-day simple moving average, but didn't really make it. But over here, we can say that it pretty much touched it. Now, the fact that the price came twice close to 50-day simple moving average, it gives me belief that if this area has strong selling pressure, which it seems like it, and if price starts to break, and then it breaks below these particular lows of these daily candles, then the chances are the price will not only kiss the 50-day simple moving average, but it will break below that. Now, of course, in an ideal situation, we want the prices to continue to retrace and come into this area, because once it comes from here, we know that there was a huge rally from here. So we will see another huge rally out of that. And by that time, we will see a decent correction as well, which the RSI is telling us that the correction is due and the correction is coming. So looking at this particular chart, we have a short trade. And if it works, we have a big risk to reward ratio with respect to that as well. So in all, this trade is making a lot more sense for us in terms of price analysis. Now, I'm going to quickly move on to the Nasdaq index because we are running pretty much towards the end of our webinar. Not much time has left, but I will also do one more thing, which is the fund flow as well. and measure the sentiment of the overall index, because for you guys to understand that. Now, with respect to the Nasdaq, again, the prices are trading above that. We know it is very good. We're going to draw our resistance line, which is right at the top. With respect to Nasdaq, because obviously, you know, a lot of price action over here is being pushed by Netflix, and this is what I was discussing in the S&P 500 chart, that if it comes, if this candle continues to go above like this, becomes like this, then the chances really are that we are going to break out of this one, and then we will continue our move. Then under those circumstances, what you want to do is you want to wait for the price to to come back. And so let's say that the price goes back up like this, right? And then you wanted to wait for the price to retest these resistance zone and then see if these levels will hold. If it holds, then of course the price will move higher. If it doesn't, then we're going to wait for the breakout and then wait for the prices to come into this area of support. This becomes our area of support just above the 50-day simple moving average. So that will be our area of support. But what is the area that I am looking at in terms of Nasdaq, in terms of my important support zone? I'll be really looking at somewhere in, because Nasdaq is a very, very, index with a lot of momentum. So I will be really looking at, again, at this is my first area of support, because these are support lines. So we should always differentiate them by changing into green color. It is not essential, but it makes things easier for us to look at it. So there you go. So that would be my first area of support. If price doesn't respect that, then I'm going to go for the second area of support. And that second area of support is going to be here. How did this area of support came? Because this is the first when it started to break above, price started to move up. Then this candle right over here, it confirmed over here, this candle, that look, prices were going up, but then we had a retest of this particular price level. And then when the retest happened, we had a massive bounce to the upside. Then again, prices started to retest these price levels. And then again, we had this massive rally to the upside. So this is a very, very good support zone. So if the prices doesn't stop over here, the next channel is going to be over here. But first is, okay, it seems like it is going to have a fake breakout. If it is a fake breakout, then let's see if this support zone will hold. If it doesn't hold, then we wait for the price to come into these particular price levels. Now, as promised, I am going to measure the sentiment of the market, and for that, what I need to do is I need to, there you go, Trump is leaving. I need to go over here into the Bloomberg chart, into the Bloomberg platform, and then I will show you right over here that what is the sentiment in the market. Now the market over here, what we're going to look at is just this particular line. This is your 200-day simple moving average, percentage of stocks of each index over here, which are trading above or below the 200-day simple moving average. So what we're going to do is we're going to quickly measure the sentiment of the market very, very quickly. And how are we going to do that? So let me just see if there are any support components made by support. Okay, so some questions, what are the support components elements made by? So support is basically when you are pretty much sure that the market is going to buy, going to move higher. This is where major buy orders are sitting in. Okay, Paresh, if you missed anything, don't worry about it. Just go back and then you will read it. VIX, okay, is there a relationship with VIX? Very good question. Yes, VIX is the volatility index. It has an inverse relationship over here. Do you use VIX for making? Yes, Sophia, Zofia, I do. What is the best time frame to be used for trading indices? Daily time frame and then 4-hour time frame. Take a short position. Yes, well, that's what I've already answered. Now, pay attention very, very carefully what I'm about to tell you. Should I have in my counter trade indices? I cannot, someone is asking how much should I have in my counter trade indices? I cannot tell you that question. That is your risk profile. Okay, we see Donald Trump leaving. He's going to get into the plane and he'll be leaving Washington from here. Now, from here, what we see is this is your Dow Jones index. We see that the 93% of the Dow Jones stocks are trading above the 200-day simple moving average. If 93 of the stocks are showing that it is way overbought market, it is very, very much overbought market, and market is, there is a possibility of a retracement. And then when we look at the RSI, out of the Dow Jones 30 stock, 17 stocks are trading above the 70% of the RSI. So that shows that yes, even though it is over it is the prices have gone too fast, but still a large number of stocks are still telling us, like 13 stocks, very small number of stocks actually telling us. But let's just say that more stocks are telling us that this Dow Jones is way overbought and it is going to see a retracement. Now, with respect to the S&P 500 index, what we're seeing is that the 90% of the stocks are trading above the 200-day simple moving average, which shows that, look, the momentum is good, the bulls are in control, but the S&P 500 index is not really overbought because only 12% of the stocks are trading above the 70% RSI. Now, with respect to Nasdaq, it says that 77 stocks out of 100 stocks are trading above that particular moving average. Again, bulls are very much in control, and only 19% of the stocks are trading above the 70 level of RSI. So again, even though Nasdaq is gone very far and all of that, but still there are chances that it will continue to move to the upside. Now, this comes to the end of our webinar. I hope it really helped you guys. If it has, then make sure that you join us again next week. We will go in a lot more detail today. This particular event has taken a lot of attention from us, and we have been focused on that. But thank you once again for joining. And remember, I cannot stress enough for you guys to engage on social media. The contact details are here once again. This is your opportunity on a daily basis to learn more and to continue to learn more. Paresh, it will be on YouTube channel. The YouTube channel handles are here. All right, thank you, and see you guys next time.